Good afternoon, World Wide Web. Another update video on AMC. How healthy is AMC as a company over the last 6 months? How much have they improved their situation? Let's take a look. Here is their income statement, and I wanted to focus in on this middle quarter here, this big one. This is the year. Notice it trickled down here. The revenue is falling. The writer's strike, no movies came out. There's a bunch of crap. Not many good movies there. Here was a good quarter, September of 23. But we're going to take a quick look at all of them. What we're trying to find is the nut of this company. The nut is how much it costs them to break even. In September of 2023, their revenue was $1.41 billion. Their net income was $12 million. They made $12 million. They broke their nut. They did better than their nut by $12 million. So we can safely assume this company's nut in September was $1.4 billion per quarter. That's what it costs them for a quarter to keep the doors open. This is a key number. How much does it cost to keep the doors open? And we go just 3 months later now. We got some dilution that's occurred. They issued more shares. Their price tanked. They sold into it. They did some crappy things, but they raised some money. They got the company healthier. In this case, when you look at December of 2023, you got $1.1 billion in revenue, a lot less revenue, a net income of negative $182 million. Now, if they would have brought in $182 million more of revenue, or close to that, maybe a couple of $100 million, they would have broken even. So the break even in this case, we're going to call $1.3 billion, which compared to the $1.4 billion is kind of an improvement of $100 million. They lowered their nut by about $100 billion. Then you go to this quarter, March of 2024, and they lost $163 million. They only did $951 million in revenue. So we can deduce that if they did another we'll call it $300 million, since they do it about 50 points, 300 million to 951 is 12.5. So that's another $50 million reduction of their nut. They're doing much worse revenue, and their bills are getting smaller. The reason their bills are getting smaller is because they're paying off debt, they're paying off credit cards. But I just wanted to show everybody that's what they're trying to do is get their nut low enough where they can be a profitable company. Right now, their nut's probably at 1.2 billion or in the high 1.1s. But it was 1.4. Now it's 1.2. So it's getting a lot better. And what they need it to do is to get to like 900 million, not 1.2. So they're looking for further progress, paying down their debt, paying off their $2 billion worth of bonds with obnoxious 16% interest rates. They're looking to improve this. Yesterday they raised $250 million just on selling into the meme rally. That money is going to go towards paying off their debt and lowering this nut even further. When you pay off the debt, you don't have to pay the interest on the debt. It really helps your quarter out. This is a stable company. They're not outrunning more theaters. They're not reinvesting in themselves. The only thing they're doing is paying off debt with all of their money and trying to get this nut into a reasonable zone where they know when they sell 1.4 billion in movie tickets, if their nut is 900 million, they'll make 600 million in profit, be a hugely profitable company and a very valuable stock. This is what they're going for. They're going to shave, they're hoping, the $1.2 billion current nut down to about $900 million, which even in Hollywood strike land, bad movies, nothing good coming out, would still be a nice $50 million profit for the quarter. with a chance of good movies coming out and making it a $600 million profit quarter. That's how close they are to becoming profitable. You have to add up the cost of the lemonade stand and what it takes to keep it running. Sugar, water, lemons, rent, all of the stuff, the staff, all of that stuff, and then your credit card bills. For their problem, it's their credit card bills. Let's take a look at their balance sheet really quick. The health of AMC. It's coming more into proportion. It was $8.79 billion in assets in September, and $10 billion in liabilities, 10.93, 10.86 in liabilities, 10.57, 10.86 to 10. That's $30 million they paid off in liabilities. And their assets, 8.59. They reduced some assets, 8.79. I think they probably closed a few theaters, maybe a couple of the bad ones. But they need their revenue to be higher. They need their net win to be bigger than their net loss. They need their revenue to be higher and their bills to go lower. That's the end goal of the CEO. Get the most revenue possible at the best margin possible and have the least expenses as possible. Right now, they're not in a winning formula. As you can see, if you need $1.4 billion a quarter to keep your movie theaters open, and that's your biggest quarter in 6 years, you're just losing money hand over fist, quarter over quarter. But some of their worst quarters over the last 6 years, their very worst, it's going to be around $1 billion, 950 million being the low, unless it was the COVID 6 months, and that, or a year. In that case, it went even lower than that. But on COVID aside, they're still bringing in $1 billion a quarter, on average, maybe 1.2 billion in a quarter. When they have their bills, their nut lower than that, then they're making a profit. And that's the game, folks, to make a profit. How close is this company to profitability? I'd say they're getting really, really freaking close. AMC Entertainment, everybody, it's going to be a healthy company again, and they actually have some good goals for fixing the thing and making it profitable. It looks like it's heading in the right direction. The debt is steadily going away. All this reverse split sell off, make the shareholder pay for it, sell into the rally, all of the sleazebag shit they've done has made this a stronger company, like it or not. It's a stronger company, and as Roaring Kitty would say, I like the stock. I don't know about the meme rally. I think it's going to pick up again, but like the video and subscribe to my channel for more updates on AMC, GameStop, all of your favorite stocks. Thank you very much, and have a wonderful afternoon.